Right, well, a mounting wave of M&A is the focus of a new report by UBS. It looks at how the markets are responding and what it all means for investors. Well, joining me now is one of the offers, UBS analyst Dan Stillit. Dan, thank you so much for joining us in the studio. There's so much news about M&A, and yet it seems that a lot of it isn't priced in. If you speak to some investors, they say, well, hold on, there is M&A, but we still have to make sure that actually there is growth. How is M&A going to pan out in the next 3 months?
Well, if you believe the press, you would think we're right in the middle of an M&A wave. In the last 2 quarters alone, there were 100 different European companies cited as being under active consideration. The reality is about 1 in 50 turns out to be an M&A deal in the subsequent 2 quarters. I actually think we're at the beginning of an M&A wave. There are multiple reasons for that in various degrees of importance. Falling stock market volatility is very important. Balance sheets are heavily deleveraged. Probably most importantly, CEO confidence is up. Revenues are very visible.
Yeah, Dan, it's very interesting when you look at your report, you actually spell out these 10 good reasons why you should be bullish on M&A. Is anything actually surprising when you were writing this? Is something struck out? I mean, are there industry groups that are more likely to be consolidated than others?
The most surprising thing for me was when I looked at the performance of the portfolio of stocks that we recommend, our so-called M&A watch list, which is up over 20% since December, how few of the stocks in that list are not carrying a bid premium. Only 16 out of 60 are supposedly carrying a bid premium. That was surprising. The other thing is size. I think for the first year of the M&A wave, the majority of deals will be sub $5 billion.
Dan, why no bid premium? Is that just the markets? I mean, it's not in the market's radars. There's still too much risk aversion, or they're just not getting it?
I think there's a fair degree of risk aversion. I think that, to be honest, because there is so much noise, so many names have been thrown out there as M&A targets. Investors aren't quite sure what's what, and I think they still need to see more deals. There's not enough activity yet.
Yeah, I was looking through your report, and actually you named some of the companies that you believe will be taken over. What would be your top pick at the moment? I mean, something that looks very likely.
I would say National Express is a good one. An important theme for us is the idea of unfinished business. If you're in a market where you have a high degree of risk aversion by corporates, they're really looking to buy what they know very well. It's a consolidating market. UK transport, you've had a big deal with Deutsche Bahn. You've had approaches from Stagecoach, approaches from CVC. I think they'll look at it again.
There's also a new takeover code here in the UK. How is that going to affect M&A deals?
I don't think it's going to be a major obstacle. You have to remember that the UK is one of the most open takeover markets in Europe, and in fact a lot of the cross-border flows that we expect, remember 40% of deals are now cross-border, a lot of the inter-Europe flows I think will concentrate on the UK market. If you compare the UK with a lot of other markets in Europe, it's still very open. I don't think it's going to be a big obstacle.
Interesting. Dan, thank you so much. Dan Stillit there.